Welcome, everyone, to Summit 2022, Inventing the Future of Money. I'm Stefan Esposito, Director of the Harvard Business Analytics Program, and we're so happy to have you here with us today for this event presented by the HBS Digital Initiative, the Harvard Business Analytics Program, and the Digital Data and Design Institute at Harvard, also known as D-Cubed. Since this is the first event co-sponsored by D-Cubed, I wanted to provide a short introduction to the Institute and how it seeks to unite all of you who've joined us today. So backed by a new architecture for faculty research and innovative industry partnerships, D-Cubed will educate a new generation of leaders and reinvent how organizations compete and thrive in the digital world. To amplify the impact of research and innovation, D-Cubed seeks to build a network of committed learners/leaders. Events such as this will unite existing groups, such as the Digital Initiative Network, the HBAP community, and HBS and Harvard alumni around the most pressing issues of today and tomorrow, such as the future of money in the world of AI, exponential digital growth, and increasing societal polarization. To that end, I'm so pleased that we have the amazing thought leaders who will speak with us today to help start us all on that journey. And all of you who signed up to attend will receive additional information about the launch of D-Cubed in the coming months. But before I turn it over to our speakers, I did want to take a brief moment to orient us all to the digital platform, Hopin, that we've all hopped onto this morning today. So on the left-hand side of your screen, you'll see the stage icon, and it's the second one down, and that's where you primarily want to stay so that you can view the event. Later on, when our speakers finish, we'll use the people icon to do some speed networking with one another. If you look over on the right-hand side of your screen, you'll see two tabs. One is stage and one is event. In event, you'll be able to chat with all of the people who joined today, but in stage, you'll be able to interact with polls and use the Q&A function to ask questions which your peers can upvote, which will then be passed along to our moderator. And if you have any trouble along the way, let us know in the chat or privately message David Homa. With that, I'd like to introduce our moderator for the discussion. Professor Scott Kominers is the MBA class of 1960, Associate Professor of Business Administration in the Entrepreneurial Management Unit at Harvard Business School, and a faculty affiliate of the Harvard Department of Economics. Scott is also an affiliate of the Harvard Center of Mathematical Sciences and Applications, an associate of the Harvard Center for Research on Computation and Society, and a research economist at the National Bureau of Economic Research. He's a market designer, an economic engineer seeking to translate economic analysis into practical solutions to real-world problems. So thank you so much for joining us today, Scott.
Thank you so much. I'm really honored to be here. Thank you to everyone who has tuned in. And as Stefan just said, please send us questions as we're chatting. This is really supposed to be a conversation, and we'd love to have you guys be part of it. It is my great honor and pleasure to introduce our two speakers, our distinguished guests. I'll introduce both of them briefly, and then they will say a little bit more about themselves and sort of how they think about the sort of the future of money. First, we have Sheila Warren, who is the CEO of the Crypto Council for Innovation, where she leads a group of the most influential crypto industry leaders in the world. She also serves on a number of crypto advisory boards and committees and is co-host of CoinDesk's Money Reimagined podcast, which you should definitely check out. She holds a bachelor's magna cum laude in economics from Harvard and a JD from Harvard Law School. Our second speaker is Vasant Prabhu, who is the CFO and vice chairman of Visa. In this role, he oversees Visa's financial strategies, planning, and reporting, as well as all financial operations and investor relations. He holds a bachelor's in engineering from the Indian Institute of Technology and an MBA from the University of Chicago. Let's welcome both of our speakers. Please send some applause in the chat, and I will applaud live and ask them to tell us a little bit more about themselves and their roles. And Sheila, do you want to start?
Sure, I'm happy to start. Thanks, Scott. It's great to be here. So as of February, I took a role as the CEO of a Crypto Council for Innovation. We're a global alliance, as Scott noted, of industry leaders focused on ensuring that at this critical juncture for the crypto industry, we see the enactment of forward-thinking policy that promotes both innovation and an equitable and inclusive model. And prior to this role, I founded the Blockchain Digital Assets team at the World Economic Forum. And when I left the forum, I was running their entire tech policy division. So I'm a lawyer by training, as you heard. I double dipped at Harvard, as I'm sure many of our listeners possibly did. I started off on Wall Street, did a stint in civic tech, built product. I was a tech person, a tech founder for a little while. So I've kind of been around the gamut, and I'm deeply excited to chat with you all today about the future of money and about Web3.
Awesome. Vasant? Oh, you're on mute. Vasant, you're on mute.
Vasant, you're on mute.
Sorry about that. Hello, everyone. As Scott said, I'm at Visa, and I think it was a little over 60 years ago that Visa actually started the process of digitizing money. I know we talk a lot about digital money today. In those days, the word for digital was electronic. People have forgotten that. The electronification of money started when, in Stockton, California, Visa created the concept of a credit card. And so the idea of digitizing money is not new. It's been around as long as humans have had digital technologies. And the first version of it was the digitization of cash through a network like Visa. So obviously, we're deeply engaged in this topic of digitizing money, digitizing cash. We've been, deeply engaged in all the developments on the blockchain. I like to think about it more about blockchain technology rather than cryptocurrencies, so to speak, and we can get into that later on. It's an exciting time. Money has been around a very, very long time, and we certainly have a lot of debate underway now about how the emergence of new digital technologies will impact, what money has been. So I look forward to the conversation. I'll turn it over to you, Scott.
Fab. Thank you. I mean, that framing actually is really important, right? We sort of think of, or rather, there's a lot of public discourse that sort of suggests that all of this stuff is new. But when I'm teaching my students, I remind them always that it's not that it's, sort of fundamentally new, right? We're solving the same, sort of underlying design problems, right? How can we enable people to transact with each other? How can we enable different forms of exchanges? And we're just, improving and changing the technology that manages that. So I wonder if, both of you, from your vantage points, just for almost like an icebreaker, could you give us your approximate vision into the future? Like, what should we think of as the future of money, like near term and medium term? And if you can tell us what's coming way down the pike, that would be great.
Go ahead,
I wouldn't deign to predict way down the pipe. I think that when I came out of Harvard Law School, their blockchain did not exist. There was no such thing as crypto. We've come a long way. I mean, it's been some time since I graduated from Harvard Law School, but it hasn't been that long in the scheme of things. So I do think in the near term, we are starting to really we're having to reckon with the reality that our legacy financial institutions and systems simply are not serving a tremendous population, a lot of people. And people really in every country in the world. So we tend to think of this as a problem relegated to the global South, but certainly the pandemic has revealed fissures and cracks in our financial and our technical systems, frankly, and gaps where through a combination of technology, business model, and regulation, frankly, and policy, we've created these places where people are just invisible, essentially, to the systems. And so I think that we are facing a major reckoning of that. Now, I think crypto is a response to some of that. I do think that's the case. I think that blockchain technology has enabled a new way of thinking about value exchange and transactions, to your point, Scott, that I do think has the potential to really address and fill some of these gaps. But that is also in tandem with, I think, the cultural push against intermediary players who are basically turning out to be more exploitative than people have realized, right? So we've seen this again in the kind of the Web 2 platform space around data collection and harvesting that's being used for targeted advertising, things like this. We're also seeing it, I think, in certain kinds of financial practices that are seen as more predatory than not, even though they're somewhat socially accepted. So I think this is all in conjunction with what's happening in our culture, that sort of mistrust of institutions, distrust in media, all these kinds of things are coming together. So I guess my broad prediction is this reckoning is upon us. It is not something we can avoid or evade. There's either going to have to be dramatic transformation of our current, I call them legacy systems, or I would say the inclusion of these new systems that are at the heart of it designed to address some of the core problems that have arisen. I see a future where we have a combination of different kinds of opportunities financially, right? So we have traditional, fiat. I don't think cash is ever going away personally. I just don't think that's realistic. But I do think we'll see central bank digital currencies, right? We'll see digital currencies that are M1, that are fiat. We'll see stable coins. We already see these. We'll see crypto. We'll see all of these things playing in an ecosystem that I do think will provide more opportunity to more people. At least that's certainly my hope.
Yeah, since this is about the future of money, and as a history buff, I thought I'd start with a little bit of a historical context, because
please,
fundamentally, nothing really changes, right? Humans have needed something to do three things: as a store of value, as a medium of exchange, and as a unit of account. And if you go back in time, when humans produced surpluses, Warren Buffett said the other day to someone, where should I invest? What's the best investment? And he said, well, the best investment is your own skills. And, so we all have skills, and, if our skills generate value that's in excess of what we consume, we need to store that value somewhere. So money serves that purpose. Medium of exchange, once you have a store of value and you want something you don't have, you need to find a way to exchange it. And a unit account, of course, is, I guess, part of what I do as a CFO is somehow you need to count everything you have. And so talking about I have 20 sheep and 30 goats, you have a unit of account. So nothing fundamentally changes. And, after a lot of trial and error, humans adopted gold at some point in time as a reliable store of value. And we don't need to get into all the reasons why. And gold was attacked for 5,000 years in many different ways, and it endured. And then they say, 3,000 or 4,000 years ago, people started cutting the gold into little pieces called coins, which proved to be more useful as a medium of exchange. And then along the way, gold was tokenized. There's nothing new. There's no new ideas. I mean, a token on the blockchain is no different than taking gold and tokenizing it into a piece of paper, which they say happened in Florence. Where people, deposited their gold and had little tokens of paper. And they say Kublai Khan was the first to then, have a government issue tokens. And all governments sought legitimacy for their pieces of paper by linking it to what humans trusted, which is gold, for a long time. And frankly, until 1971, that was still true, with the dollar. And so, there's been many versions of tokenizing, and Bitcoin is the latest version of that. And there's been many versions in which people transmitted these tokens, and cash was a physical version of it. And now we're looking, for various digital versions of it. And certainly Visa created one digital version of it, which has endured for quite a long time. I guess what I would end with is money is a very, very conservative institution because it involves value. And humans are incredibly conservative when it comes to that. And I know there's a lot of talk of revolution today, but I think people shouldn't forget that fundamentally, humans are very, very conservative when it comes to value and the exchange of value. And it's, there's not a whole lot new here. It's new technology is trying to do a very old thing.
So I'm struck by sort of the dualism between your two comments, right? On the one hand, we have this new novel technology enabling, sort of people to transact without intermediaries and access for those who feel in one fashion or another that they lack trust in the existing institutions. On the other, we have this sort of story, like at some level, again, like none of this is new, right? We're doing the same types of things we've been doing, in a different technological fashion, maybe with like different balancing sort of mechanisms around, how they're, who manages the systems or how they're, sort of implemented. And money is very conservative, right? Like, sort of value, like changes in value take a long time, or in how we use and express value take a long time. So how should we make sense of this, right? Like, on the one hand, it really does in some level feel like there's a revolution going on. And on the other hand, it's a revolution in a path that is very like linear and has existed forever.
So I don't think they're mutually exclusive, right? I mean, I think that people are trying to do the same kinds of activities they've wanted to do for millennia, but they're trying to do them more directly without having to rely on institutions that you said that they don't trust, but I would say that that have not included them, that have historically excluded them, right? Or have maybe not prioritized their needs and desires and wants and values and whatnot, right? So I do think it's a revolution, not in the form of activity, but in the form factor that surrounds that activity. So I think what was initially appealing to a lot of very early adopters of Bitcoin, for example, was the peer-to-peer nature of the transaction. The fact that you could exchange directly with another individual, right? And you could do this without the need for any intermediary to engage in that with you. And you could have the same, finality of the transaction, the same reliability, the same security, better security. You could still have the attributes of a transaction that make it attractive, right? And so I think when you take that, the lens I take on this a lot is I'll repeat, there are a lot of people who can't take for granted that works. And so I think that the extent to which you believe in, Web3 over Web2, or you believe in a crypto economy over, legacy financial, depends largely on how well those systems have treated you and how comfortable and confident you feel in them. And fundamentally, if you've even had access to them in the first place. And if you haven't, then, it's not a particularly crazy leap to look for something that's going to give you opportunities to basic kinds of financial functions that I think most of us on this call today will take for granted. Checking, a basic credit, line of credit, insurance, like just kind of basic sorts of things that most of us just, we maybe agonize over at one point, but then sort of take a little bit for granted, are not available to a lot of people in the world because of gatekeepers preventing them from using systems. Whereas the benefit of a crypto economy, at least in theory, we can interrogate this, is that everybody has access to these systems, provided that certain technical accessibility and requirements, which are non-trivial, and I think it's important to land that point, are met.
Yeah, I think it's important to separate store of value from medium of exchange. Set aside unit of account.
Yeah.
Some things can be a store of value, but may not be good mediums of exchange, right?
Yep.
You live in a house. Your house can be a store of value, but you
can't trade it, sort of flexibly and fungibly.
So, when Bitcoin came around, I guess there was a belief that Bitcoin could be both a store of value and a medium of exchange. I think it's become apparent because of the inherent technological issues with the Bitcoin blockchain. I don't like to say never, but it seems highly unlikely that Bitcoin can be a medium of exchange, and we can get to why, right? It's the speed and cost of how the Bitcoin blockchain works. So I think even the crypto diehards are probably accepting the fact that Bitcoin is probably a store of value, but not likely a medium of exchange. So then the question is, is Bitcoin truly a store of value? And again, I don't necessarily want to get into that debate because I think the answer is not in yet, right?
Right.
I remember, Henry Kissinger apparently asked Zhou Enlai when he went to China in 1971 or whatever, what he thought of the French Revolution, and he said it's too early to tell. Bitcoin hasn't been around long, right? The other store of value humans adopted has been attacked for 5,000 years. Remember alchemy, remember the outlawing of ownership of gold. I mean, there'll be tests, right? And we'll have to see how Bitcoin endures those tests. Whether it becomes, just scarcity is not enough as a store of value. Lots of things are scarce. And we all know there have been all kinds of stores of value over time. So there's a store of value dimension and a medium of exchange. And you can't confuse the two, because that's why stablecoins have come around. Because to be a medium of exchange, you have to offer 4 key things. Because people don't exchange value without those 4 things. One is security, the other is reliability, and the last 2 are incredibly important, which is speed and cost. If I go to London and buy beer, the guy is selling me the beer not because he loves me, but because I show him a Visa card, and essentially he doesn't know who I am. He has to sell me the beer. I'm going to consume it there. He needs to get paid. So the transaction has to be instantaneous, and there has to be an element of trust and an element of security. And if the beer costs $1, the transaction can't cost $3. So there's a need to meet those criteria if something is going to be a medium of exchange. And the jury's out now on, okay, how is crypto a blockchain-based token? I hate to use the word crypto, a blockchain-based token, a token that runs on the blockchain. How is it going to meet those 4 criteria? And the technology isn't there yet.
It's funny. One of the top voted comments in the Q&A or questions in the Q&A is exactly pointing to this question. So maybe we could even get a little bit more precise. Like what needs to happen in order for a digital payments technology, much less a crypto payments technology, to be sort of functionally secure and sort of give consumers that confidence? Like, how do you actually achieve that? And then, Vasant, maybe you could start how does Visa achieve that? And then, how do you even see that as possible for these emergent technologies? What has to happen for them to get there?
Yeah, if you sort of look at what Visa does, and people often don't really understand the full dimension, right, of what the service that Visa provides is. At the heart of it is trust. But I'll set trust aside, because the trust is earned if you do those 4 other things. So the first is reliability. You have to, if you're going to walk out of there with no cash in your wallet, you have to be sure that this thing you have, this credential you have, and we don't like to call them cards anymore. It's credential. It could sit in a wallet, a digital wallet, has to be usable just about everywhere, right? So effectively, it has to be, to use a modern term, it has to work on everybody's network. I mean, you have to accept it. Sheila has to accept it. You got to be sure of that. So the ubiquity is rather important. The second is security. You want to be sure that somehow your money won't be stolen. And I'm using a very simple term there. And then the last 2 is, it has to be literally milliseconds in terms of how long it takes for the transaction to be done, and fractions of cents, right? That's sort of the Visa standard. And having done it unfailingly for 60 years and delivered on those 4, you build a trust, right? So that's what something has to have to be able to function as a medium of exchange in today's economy. The issue right now with a lot of blockchain technologies is that they're at various stages on those 4 dimensions. If you want to be highly decentralized, as you give up on speed and cost.
Right.
As you try to increase your speed and lower your cost, as some other blockchains like Solana have tried to do, then you reduce the validation nodes and you move towards something that begins to look more centralized, which militates against the desire to be non-controllable by anyone, right? And then you still have the reliability and security issues to resolve, because the levels of security and reliability are incredibly high. And then there's a last thing I would say that you can't take out of the equation. When you exchange value, humans are humans. Humans make mistakes. Humans need to fix problems. I sell a bored ape that's worth $300. That's worth $3,000 for $300. What do I do? Well, systems like ours have been tailored to deal with the human requirement of fixing an error, right? So you make a mistake, you can fix it. And even more important human requirement, which is, who do I talk to now? Like, okay, so something got screwed up here. Who can I call? Humans need that. So some of these have still to be sorted out by these alternate technologies, which they will sort out, but we're quite a ways from sorting out the speed issue, the cost issue, the security issue, the trust issue. There will always be early adopters, but for mass adoption, you need to solve these issues.
So I think you're describing what's just considered the really standard blockchain trilemma. It's a technical trilemma that basically says, decentralization, security, and scalability, maybe pick two, certainly pick one, maybe pick two. No one's really been able to pick three. And that this is a technical challenge that many, many people are working very hard on to kind of say, how do you get the level of security of the Bitcoin blockchain, for example, which is extremely secure, with full decentralization, which again also is a component of the Bitcoin blockchain, but then that scalability, right? That ability to kind of really promote mass adoption. I think it's interesting that we're grounding all of this in payments, because of course payments is just one use case around these things. Totally. So we have talked about store of value, exchange, et cetera. But I don't know that anyone is arguing that payments is going to be the killer app, for blockchain technology necessarily. There are a lot of other things I think that did need intermediation, where this kind of technology is proving to be, I think, further along than in the payment space. And again, I would make the case that, the way you feel about payments is going to be dependent on how hard payments are for you to make as an individual, in a community, in an economy, right? I think it's other things. So when I think about decentralized finance or DeFi, what I find fascinating are the idea that you could use this store of value, you could basically create opportunities to collateralize some of this, right? In ways that could give you on-chain credit, insurance, lending, whatever it might be, things you don't have access to. The other thing is, I'll just kind of piggyback off of Visa's slogan, which might still be a slogan, everywhere you want to be. It's not that it needs to be available everywhere. It needs to be everywhere that you want to engage or transact or exchange or whatever you want to do. And as lives move more and more online and digital realities become increasingly critically important to people culturally and socially, where you want to be is online. And of course, all of these kinds of tokens and this token economy and the crypto economy runs online. So the idea that the places that you want to be, the kind of point of sale, merchants, things like that, not to say any of that's going to go away, but I do think that we're seeing a little bit of transition, a little bit, pretty radical transition and transformation, right? We're seeing this in where people future of work. We're seeing it in transactions. We're seeing it in online retail. The pandemic was a big catalyst for a lot of this activity. And so as people are more home, they're more, staying kind of closer to their local communities, I think we are seeing the adoption curve start to hockey stick a bit, because the reality of our social environment is such that being online is turning out to be far more prevalent than it has been in the past. And I also think the last thing I'll say on this is, I think this is also very demographic. So I do think when I think about, educating my parents about, an ATM is you don't have to count every single, it's okay. It's going to be all right. A person doesn't have to hand you money, a bank teller, for it to be real money, right? It's not fake. It's not counterfeit. Like, it's real money. You can get it out of a machine. We're in a stage, I think, of evolution where when I think about my young children, they are crypto native is how I think about it, right? Like, I was digitally native, but they're crypto native. And the way that they think about their intermediated reality is very different from even the way I think about mine. So, I think that we're seeing a lot of gaming, the approach of gaming kind of bleed into economic transactions. We're seeing people think about earning, different kinds of value, like play to earn as a model that's now becoming very popular in certain parts of the world, particularly ASEAN and LATAM. So all of these influences are going to start to be contagious across a variety of different places, and I think are going to be supported by the growing crypto economy.
Yeah, I completely agree that, I talked earlier more as sort of in the context of money and the use of blockchains in the context of money. I truly believe blockchains are revolutionary technology, probably the single biggest innovation since the internet. I mean, I truly believe that. And I truly believe that blockchains are the network for the exchange of value. How that all evolves remains to be seen. But there are many, many ways to exchange value without it being necessarily in traditional monetary terms.
Yeah.
And it'll be very interesting to see how the blockchain is used in that context. And I think it can be an extraordinary technology for a whole host of things in terms of establishing ownership rights, as you see in NFTs and so on, ownership rights for land holdings, ownership rights for all kinds of things. So I do think that sometimes the discussion of blockchains only in the context of cryptocurrencies, whether it's Bitcoin or stable coins, is a disservice to the blockchain. The blockchain is just far more valuable than just that.
Yeah, I'll echo or third the sentiment. A couple of collaborators of mine and I even wrote an article. Sort of one of the puzzles, of course. So much of this stuff became popularized through the ideas of cryptocurrencies and like this sort of concept of finance. But currencies have to be, in order for a currency to be really valuable, it has to be that like everyone agrees it's a currency, right? You sort of need like very, very widespread agreement, exactly these types of trust and stability you guys have been talking about. Whereas for many other types of digital assets, you really need only this where you are, right? Like all the people who might want to own that digital asset have to agree on it. But like for an NFT of a Bored Ape or of a digital, like a deed to digital land or something like that, that's actually a much smaller set of people who have to be in agreement about what the token means and how to use it and have the opportunity to exchange. And so with many of these other digital asset categories, you could sort of expand value outwards rather than sort of having everyone have to agree on the value and then sort of like push it inwards. And we're getting tons of questions in the Q&A about central bank digital currencies. So I do want to take us there in a second, but let's stick with these other digital assets for a second, because you've both touched on a couple of different applications, right? Like, deeds for land, like establishing ownership rights, NFTs. Where do you see the biggest opportunities there? Like, you've both sort of said like blockchain is more than just currency. Where are the biggest applications?
Go ahead.
Sure, sorry, yeah. and you can jump in either order.
Yeah, you mentioned NFTs, and so I personally find NFTs a little frothy right now, to be very frank. But I think that the core concept of NFT is extraordinarily powerful, and so an NFT, as Vasant mentioned briefly, is there's ownership that can be established. IP rights are being renegotiated essentially when it comes to digital ownership of a particular kind of asset. The idea that NFTs have skyrocketed in value, some of them, not most, buyer beware, kind of thing. But also the idea of an NFT as a certificate, as a badge, as a ticket is something that is starting to be explored. So the idea that your NFT is not just something fun, like a luxury good that you own because it makes you feel good and you put, the skin of it on your Twitter handle or whatever it is. It's actually something that gets you into certain spaces, right? So you own this NFT, and then that gives you access, like a ticket to a concert or to a certain experience or to a certain group, community, or experience, whatever it is. That is something that's starting to be explored. And I find this so funny, like NFT, there was an NFT conference in New York, and literally there was a bar that you had to show this rock, one of the earliest NFTs, like this hilarious, like it's a rock, to get into that bar. You had to actually display that you were the owner of that. You had access to, all that kind of thing, right, in your wallet to get into the bar. And then the bar was all these rock holders who were just hanging out, and that was how you got in. Yeah, rocking, exactly how, right? So that is a very kind of crude, rudimentary example of the kind of experience you can create using a digital asset that could be extraordinarily valuable over time, right? So I think that is something that we've always thought about credentials as, academic credentials. You're an alumna of a certain thing, you get to go to a certain place. You have you're a citizen of a certain country, you get to go to a certain place. Online, I do think they're going to prove to be extraordinarily valuable pieces of property because of the access they give you to certain spaces. So that's kind of one thing I think is really interesting, is that taking away the sort of luxury good component or the brand or whatever it is and making it about access is an interesting transition, right, that we're going to see. I think the other thing that's really interesting is the idea that these tokens are going to give voting or governance rights. So it's not just that you hold a thing and you hope it appreciates in value, which we've talked about quite a bit. It's that gives you power to influence the system. Right. So rather than relying on, a company CEO or whatever to make certain choices, or the board, to kind of make choices that you hope are in line with your values, et cetera, you have an opportunity to actually vote, and not just as the single shareholder, but as somebody that has a token, as a token holder, in a way where the conversation about a particular topic or proposal is happening online. It's happening in a transparent way. The vote is recorded online. You can kind of see who did what and when and how the thing went down. All of that is accessible to you. So there's this concept, I think, of engaging stakeholders in decision-making around these things that a token can also provide, that I think is undervalued. I don't think it's undervalued in the crypto economy. I think it's not quite understood beyond the sort of people who are really active players in this industry or in this ecosystem of the importance of what that can grow into being as well.
Yeah, I mean, there's human needs don't change, and human needs are going to be served in the digital world much as they are in the physical world. Humans appreciate art. For centuries, it's been physical. What's wrong with digital art? And the blockchain becomes a mechanism for establishing ownership and to exchange digital art. That's going to happen. It's inevitable. Yeah. It's called an NFT. But fundamentally, it's very simple, right? Art went from being physical to digital, and now I'm going to establish my ownership. I can display it. Doesn't have to be on my wall. I can buy and sell it. Collectibles. People like to collect. Right. Membership. People like to join country clubs. Well, you can be a member on, and then an even more powerful idea is the DAO. I mean, the limited liability company was a massive innovation. Most of the world today, Visa is a limited liability company. It wouldn't exist. DAOs are a new way to create enterprises in much the way that a limited liability company was a massive innovation. So there's extraordinary things that will happen on the blockchain. And I do think when the blockchain discussion gets moved very quickly to Bitcoin, which is, I like to think that Satoshi Nakamoto, whoever he is, his biggest contribution to mankind 100 years from now is not going to be Bitcoin. It's going to be the blockchain technology. We'll wait and see.
No, I share the instinct, and I too am very excited in both these sort of novel modes of governance and these novel modes of sort of establishing ownership and transactions over digital goods, right? Like, historically, and this is near-term historical because we didn't have digital goods, sort of many centuries ago. But like near-term historically, like, it's been really hard to create economic sort of systems around digital ownership, which has led us into these like very service-based internet economies, right? But the goods market is a huge part of the the real like physical goods market or the physical economy. Like now it can be part of the digital economy as well. Okay, so now, having just taken us off of currencies, let me bring us back to currencies because we have probably 30 different questions in the Q&A about, central bank digital currencies and or the role of crypto assets in sort of like monetary, in monetary systems, both in the US and in the developing world. Maybe like that high level framing, please. I don't know, Sheila, why don't you start? Like, what are your thoughts? And then we'll go from there into, access and transparency and so forth.
Yeah, so maybe just for those who may not be familiar, just to kind of frame out the three kinds of digital currencies. So there's central bank digital currencies, which are M1, they're digital fiat. They are issued by a central bank, for whatever end goal and reasons that might happen. There's stable coins, which put very generically are pegged to something extrinsic. So US dollar coins, an example, pegged to the US dollar, but in theory, a stable coin can peg to anything. It could peg to potato futures, it could peg to I don't know, the price of a wand in a virtual environment, whatever it is. It's something extrinsic. And then you've got crypto, Bitcoin's an example, that has intrinsic value. It has the value the market dictates that it has, and the market is determined by, all kinds of things, right? So, Elon Musk says something, Bitcoin, Dogecoin goes up. Someone else says something, things come down. It's very responsive.
I forgot to. Let me quickly interject. Reminder: nothing in this conversation is to be interpreted as financial advice. We are not recommending any specific crypto assets or currencies, nor trading on the basis of Elon Musk tweets or anything else. Sorry, go ahead.
Correct. Not an investment professional, not your lawyer, right? But yes, all of that is true, right? So those are the three kinds of digital currencies. And so an ongoing question has been, well, if you issue a central bank digital currency that's digital fiat, do you need a stable coin that's pegged to that, that fiat currency? And is crypto just going to become obsolete because the CBDC provides programmability, composability, and technical attributes that are seen as very attractive in the crypto environment? My take has always been, from the beginning of my engagement in this entire space, that all three of these things have different use cases. They are important. They provide they're just designed for very different purposes. And we should also note that one crypto is not the same as another. We've already talked about how there's trade-offs in, scalability and decentralization and security and all these kinds of things. One CBDC will be very different from another, right? You got digital yuan, which is very overtly a surveillance, no bones about it, very openly being used to basically monitor certain kinds of transactions. You've got, if there's a digital euro, it's deemed to be, far more private. It'll have a lot more privacy baked into it. So these are design choices. So these things are not monolithic by any stretch of the imagination. Now, I think the question is, do I think CBDCs are going to become a very powerful force? Yes and no. So China has issued digital yuan. They initially, which I thought was somewhat funny, said that was not going to leave the borders of China as defined by, of course, CCP. We've already seen, some examples of this, attempts in Myanmar to kind of make this happen. There's a lot of investment happening out of China into other jurisdictions, right? All over Africa and even into the Middle East, into parts of ASEAN. So it's going to be interesting to see if those transactions are predicated on the use of digital yuan and what that means for the data and the information that then is going to flow back to, again, the CCP and the PBOC, right? So that's all TBD and to be determined. In the US, we are nowhere near launching a central bank digital currency, a digital dollar, but a lot of experimentation happening by various branches of the Fed, lots going on in that space. So it's kind of one to watch. I remain personally a bit skeptical about the benefits of a retail CBDC, a consumer-facing, a retail CBDC, as it's called. I think there's a lot of advantage to what's called a wholesale CBDC. This is kind of for interbank settlements, especially cross borders. I think most central banks have experimented in this place at this point, most of the major ones, and are considering this kind of thing. But a retail CBDC is something I could be convinced, but I don't really know why that would be something that would be worth the investment of a central bank to do personally, particularly when there are things like stable coins that can provide a lot of the benefits, can reinforce to some extent the value of the currencies in a public-private partnership. So how it all plays out, we'll see, but there's no question that CBDCs are being explored, experimented, piloted in many parts of the world. That will continue to be the case. And at some point, it'll become a policy decision more than anything else that determines whether or not something like this flourishes in a particular jurisdiction.
Yeah, I mean, it's inevitable that fiat currencies will be tokenized on the blockchain, right? I mean, that's going to happen. And there are two ways to do that. There are private enterprises doing it. The one that has perhaps the most traction right now is Circle with USDC, which is a tokenized version of the US dollar. And then there are the central bank digital currencies. And, I mean, I'm no expert by any means, but certainly the private efforts have a lot of traction right now. The dollar is the world's reserve currency. There are large parts of the world that would like access to the dollar that today don't have access to the dollar. If you're Argentinian, you want to keep as much as you can in dollars. If you're Nigerian, you want to do the same. And so there's a role for these privately issued tokens of the US dollar that are gaining traction in many parts of the world. CBDCs are tricky. It's complicated. Lots of questions because not every one of these works for all use cases. Cash is a very versatile thing where it works for all use cases. When you get to stable coins, there's a use case question. There's a question on which blockchain does it run on. You have to run on multiple blockchains to be truly useful. And then how do you go between blockchains? And if I'm a central bank issuing my own digital currency, cryptocurrency, a blockchain-based currency, am I going to create my own blockchain? Am I going to run on every blockchain? Am I going to be adaptable to every use case? There's a lot of issues to resolve here. I fall in the camp of CBDCs are going to be very slow to develop. The issue then is how far along is the private universe that's issuing, fiat-backed stablecoins, and then what are governments going to do about it when they worry they lose control? Governments are all powerful. Do not underestimate government power when it comes to the issuance of money. So there's a lot to come here. This is going to be an interesting movie, and we've only just seen a little preview.
Oh man, I'm sort of imagining trailer number 2 coming out, then number 3, and then there's a dinosaur.
It has many sequels, yeah.
Well, so maybe as the movie series, progresses, there's this sort of split screen of the government, negotiations and regulatory meetings. What's going on, for the ordinary consumer? How do consumers gain access to these? How does it become sort of more broadly accessible and usable as it becomes more trusted and stable and sort of effective to use? How do we do that last mile to the consumer?
Well, I think it depends on where the consumer is again, right? So 5 years ago, I do think that the user interfaces were pretty rough. I don't know that anybody.
I have a friend who was mailing money orders to buy Bitcoin,
Yeah, it was suboptimal, shall we say, right? I remember I went to a conference 6 years ago, and the question was what's more important, building fast or getting people to actually be able to use the thing? I was kind of I think user interface is kind of important, design maybe. So that's, there's no question that, is that at that time you had to be pretty committed to actually engage with some of this stuff. But now it's really straightforward. I mean, there are any number of apps you can download. You have choices, and even design and feel and path and all that kind of thing. So it really isn't that hard to convert fiat into crypto, and frankly, crypto into fiat. And that happens at companies called exchanges. And they're familiar to how you think about exchanges, exchange, fiat to fiat, right? So there are interesting questions arising about, how do you get taxed on this? And when you exchange crypto to crypto, do you get taxed on appreciation or not? Or, what happens? It's all very interesting and in flux. But getting into it is really surprisingly easy. I think most people who have not tried to, open a digital wallet and purchase, use fiat, to purchase again some form of cryptocurrency, whatever it might be, or some form of crypto, I would be surprised at how easy it really is. Now the question then becomes, then what do you do? So if you're buying Bitcoin and you want to kind of use it as a means of payment, we've already talked about why that probably isn't necessarily the best move for you. But if you're looking to kind of get into this space, I think we're finding that that's proving to be pretty easy. Now, that is all predicated again on a certain level of, you have a smartphone, you have internet access, you have, a good cell tower, this kind of stuff. You have this kind of connectivity. And that is where I think, blockchain technology can't solve that problem, right? It can't last mile this, because the last mile is about infrastructure that is going to be an investment that's going to be made outside of these ecosystems. And without that investment in infrastructure, we are going to continue to see exclusion from swaths of the population who simply don't have that kind of access. There's a lot of activity going into crypto cards and something that more mirrors kind of a point of sale sort of situation that are interesting. But again, those are very payments oriented. And the question remains, is this the thing you're going to want to use for payments in the short term versus maybe over the longer term? So all of that remains to be seen. But as I think we've said repeatedly, and I think Vasant has landed so eloquently, there's just it's an explosion in this industry and what's happening right now. So things are going to change over the next 6 months, year, 2 years, 5 years, and 10 years from now. I can't possibly predict what is going to happen. But I do think we're going to see more and more mainstreaming of the use and adoption of this form of exchange. And we're going to see this being something that becomes more and more commonplace as an option and as an opportunity.
Mm-hmm.
Yeah, I mean, we view ourselves at Visa as we're in the business of moving money. And so, as far as we're concerned, we're quite agnostic in terms of how the money moves or on what network it moves. And so we're doing our best to make it easy for people to use cryptocurrencies of various sorts. It started out very simply with, we call it being the on-ramp, right? The easiest way to buy your first cryptocurrency is use your Visa credential and go buy it at, Coinbase or crypto.com or whatever. So we call it the on-ramp. So, we do a lot of that now where people are first introduced, they own their first cryptocurrency by using, a Visa debit or credit credential to buy it. We then said, okay, people have money in all these crypto accounts. It's just sitting there. And, the Bitcoin values are going up. Why don't we allow people to use it? So, as you know, most of these platforms, crypto.com, will give you a Visa credential that you can use at any merchant around the world. So effectively, we made those crypto balances usable. So you go to a merchant, you can give them your Visa credential, you can buy whatever you want. He gets paid in dollars or euro or pounds. Crypto.com will convert it, into those fiat currencies from your crypto account, and then they pay us in dollars and euros and pounds, and all of a sudden, your cryptos become usable. What we're now doing is then saying, okay, now let's go straight, further into that. So we are now experimenting with Circle on accepting USDC as what we call a settlement currency. In other words, every night we settle billions and billions of dollars around the world. People who, that merchant has to be paid, and that bank has to pay me and all that. We do that. So now we will let people pay us in USDC. So we will custody it with one of our partners, and USDC can be used like a dollar or euro or a pound, and you can pay us in USDC. Further down the road, we see the need for, there will be a day when there's a euro version, that runs on a blockchain, and a dollar, and you may need to do a transaction that's on Ethereum in USDC going to a Solana network that's, the crypto euro. Who's going to do that, right? So we've been thinking about, how do we do that like we do today? I mean, we allow you to transact in 200 currencies. Potentially, there are 200 versions of these stable coins. Who's going to do all that across blockchains? And, so we're trying to do our best to take the friction out of all this to make it usable. But it's very early days.
Yeah. Very early days. Yeah, I mean, this movie metaphor keeps coming back. I know we're running out of time, but I guess one other thing that has been in a lot of the question answers and fits with the movie metaphor is like, is there going to be a natural disaster as like all this stuff like makes it, in the third edition of the movie, and there's like some tsunami or something. Like, how do we think about the sort of technology infrastructure becoming more environmentally sustainable, and like whose role is that?
Well, I mean, if the question is there going to be a natural disaster? Are there going to be earthquakes and tsunamis? Absolutely. Does that mean it's the end of life on Earth, meaning the end of crypto and blockchains? Absolutely not.
Yep.
So, it's going to be incredibly volatile, and you better have the stomach for it.
Yeah. A couple of comments here, right? So I think the tenor of the question is probably aimed at, is it irresponsible to be engaging with cryptocurrencies because of their environmental impact? And I think that, first of all, we have to separate proof of work from proof of stake. And I will not define those terms. We don't have time, but everyone should just go figure out what those things mean, and note that the vast majority, in fact, all but 2 cryptocurrencies run on something akin to proof of stake, which is not very environmentally heavy at all. It's actually quite environmentally light, and it's certainly significantly lighter than any of the other options are available to you. So the question really is about Bitcoin and proof of work. And the question there is, you're making trade-offs in some of the security and other kinds of questions. There's a reason the Bitcoin blockchain runs the way it runs. Those are designed into that system. There's also tremendous effort underway coming called the Lightning Network, which is a layer 2 solution, which is designed to basically think about it as pinging the Bitcoin blockchain much less frequently, which will make it much less energy intensive. So this is all being focused on. I would say it's the responsibility. Developers are working very, very hard on this, core developers in Bitcoin and others as well, and Lightning core developers. So there's a lot of people really thinking about this. It's a very actively pursued situation. The other thing I would say is, ironically, I actually think that climate change is going to force a lot of displacement of people. Climate refugees are going to become more and more commonplace in the world. It's going to be more and more important to be able to bring your value, bring your money, bring your, your assets with you as you cross a border, and probably under not great circumstances in many cases, fleeing a flood, fleeing an earthquake, whatever it might look like. I would just put that out there as something that I try not to be too apocalyptic about it, but I'm not feeling super positive about the direction of travel here. And I do think it's going to be a reality that we're seeing the challenges of Ukrainian refugees fleeing into Eastern Europe. Imagine that at massive scale based on natural phenomena that are changing and making places just inhabitable that were previously habitable. I live in California, and let me tell you, fire season is a thing we didn't have a few years ago. So all of this, I think, moves towards the idea of a digital infrastructure, a digital wallet that's going to enable you to move very quickly across a border and not have to worry about your value being accessible to you in a new place.
So a bit of an apocalyptic close there, but true, right? Like, refugees, refugees being able to transport their digital assets, it's much easier with a digital wallet than with a suitcase or something of the sort.
This is what we're seeing with people fleeing from Ukraine right now.
Totally, 100%.
The nature of the catastrophe, the catalyst might differ, but the reality of the circumstance is not that different.
Yeah, totally. And with it, like a very, optimistic potential, right? That like it can become possible for people to carry their assets with them and take them with them. And that we're seeing these technologies emerge in a way that, sort of really does create new opportunities, both for, surviving in desperate situations, which we hope we don't have to do too much of, but is really important to be able to enable, and for people to, sort of open up new forms of creativity and sort of transaction opportunities of all shapes and sizes. And then again, sort of repeatedly, let me use Vasant's, metaphor one more time, right? This is the beginning of the movie, not the end. And we've got sort of like many different editions and sequels and so forth to see as this stuff evolves. Let's thank both of our speakers. Thank you guys so much. Let's get some more applause emotes going in this chat out there. We'll get a little bit of live applause here. It's been so much fun talking with both of you. You rock. And and I know Stefan has a little bit of a follow-up. Great, there we go.
Yeah, absolutely. So I just want to again thank you all for participating in this exciting discussion. I wanted to remind everyone who's watching at home that you can go over to the people icon now and join a speed networking session where you'll be paired one-on-one with another interested pioneer in the future of money. So please go ahead and do that. And thank you all again for joining.